Joining me now for more is Larry Shover from Efficient Capital Management and author of Trading Options in Turbulent Markets. He comes to us, as he always does, live from the CME in Chicago. Larry, great to talk again. Look, I suppose we can't have a conversation without having a conversation about oil to begin with. Continues to be, I suppose, the big drag on sentiment. I'm getting a little sick of it, to be honest.
All eyes are on oil right now. It seems like the equity markets, bond markets, the dollar, everything else is focused on every tick in the dollar. Every rumor that comes out of Libya, Oman, Yemen, Bahrain, and Saudi Arabia just makes the markets move in such a fashion. It's unbelievable. We've had such great economic data come out for the equity markets in the last couple of days, and you see some of the supporting today with the S&P's higher today. But the fact is, nobody cares about anything except the Middle East right now and the price of oil.
With that in mind, Larry, is it all speculation driven? I mean, we were talking before on the show, Libya, for example, makes up 2 or less than 2% of global production. I heard some forecasters earlier in the week suggest you strip out all that speculation. Fundamentals suggest that oil should be around mid-$70 US a barrel.
Yeah, you're exactly right. I mean, Libya is a rounding error, actually. I mean, except for the peripheral countries in Europe where, like, Italy imports 30% from Libya. That's a big deal, and their economy is so fragile. But for the U.S., it doesn't mean a thing. But we're so much more worried about Saudi Arabia and that all-important March 11th date when this planned protest is going to come. People are just really worried right now.
That worry is also finding a home, I suppose, in gold. Continues to trend higher. Is that something you like looking forward?
I have a big indifference towards gold. I've never seemed to understand it. I always thought it was an inflation hedge, but now it's like the last stage fear gauge. And it seems like all the other commodities the money has flown out into gold. We're back to where we were 2 months ago at $14.30, something like that an ounce. People are scared, searching for a safe haven. It seems like gold right now is the safest choice for the people who feel like that is a safe haven.
Larry, it's Martin here. Good afternoon. Look, I'm sort of the same view. I find gold very hard to get a real feel on. It tends to move sometimes on the dollar, sometimes on politics, and sometimes on demand side. But we're certainly hearing that as the pump priming continues in the US from the Federal Reserve, there's the risk of a significant lift in inflation over the next couple of years, and the inference being that we're going to see gold significantly higher. Do you agree with that view?
I don't agree with that view. I agree with part of what you're saying in the fact that we might have some inflation, not just because of the 18% or 20% spike in oil prices in the last 2 weeks, but the fact that our economic data behind all this is coming out so well that the fear is that we're going to have inflation a little bit better than most have expected, and that's one reason why the dollar has collapsed right now, or the dollar has taken another hit today. Gold, to me, it's not driven by scarcity. It's driven by 2 people thinking it's a safe haven. One person's a buyer, one person's a seller. I'd rather own all the farmland in the world than own gold right now. I don't understand it. You can't use it for any commercial purpose, but for now, people think it's going higher, so I'm just not going to get in the way of a freight train.
Larry, hi. Good afternoon. It's Darren Thompson here. Perhaps moving towards commodities that you can use, like copper and other commodities that are somewhat leveraged to global growth. How are you feeling around those commodities at the moment and the supply-demand balance for copper at the moment?
You know, I'm a big bull on copper, and right now copper has not joined the party of the other precious metals where gold has rallied. Copper has suffered. I mean, it's still up, but it's not up that much. It's faltered the last couple of days. The feeling is that with this oil spike, production might go down, and that's the fact. Copper is going to be one of the first commodities to suffer, and also there was some reports that in Zimbabwe, there was like a huge increase in production of copper, just an excess amount of supply on the market. But I feel like it just has not joined the party because it's not considered a fear commodity. It's more of a production commodity, something that's used only for in good times. And the fact is, our auto numbers came out very good yesterday, and so copper should rally. It hasn't. Everybody's focused on copper right now. People are fleeing into gold right now because that's where the money's going.
Larry, do you expect once these fears out of the Middle East and North Africa do abate that we could start seeing that money move back into copper? One of my colleagues was telling me yesterday that his mother, they had to call the police because people were trying to steal the copper piping that was used underground. I mean, it's incredible.
That's funny. Australia is the same as the United States. That happens here in Chicago as well. I hear it all the time. But yeah, when this Mideast stuff is figured out, and when oil goes back down to a level that makes sense for everybody, I see copper going much higher because the worldwide expansion is real. The global economy is doing very well despite all the news reports. That said, there's so much desire for commodities like copper. I'm very bullish on it long term. Price volatility in the intermediate term is really scary, the way it moves up and down on a daily basis. But long term, yes, a big bull for copper.
I also want to get your opinion on looking ahead. We've got the ECB president going to be speaking later tonight in European time. Interesting note, it seems everybody wants euros at the moment and expecting some hawkish statements from Trichet. Is that your read on it?
Absolutely. It's getting hawkish and hawkish every minute that I read it. It might become less hawkish just because of the dramatic spike in oil, but they have been so hawkish, I expect them to raise rates. The euro currency has reflected that. It's been very strong. People are expecting that. But again, that economy is doing very well. They can afford a rate hike right now, and it's probably a good thing, and I think everybody's on board for that.